I'm going to go ahead and do that. I also want to ask everyone in the, not to the whole group, obviously, but if you will privately message me your name, email, address, and phone number, I will be able to send one, maybe most of you, a gift card. Thank you for coming, learning information here. Hope this is helpful. I do want this to be interactive as much as we can. So it looks like everybody's muted. Um, and you can always unmute, ask questions, throw something in the chat. I'll try to be monitoring the chat here. And we shall get started. Okay, so this is for first-time homebuyers here. So my name is Carlie.McLeod. I am located here in Jacksonville, Florida, but I am licensed up the coast. I'm in Florida, Georgia, Virginia, and North Carolina. If you're not in one of those states, that's okay. Or if you're coming to this state, great. A lot of this information will pertain to you regardless. But if you do end up wanting to move forward, we have Fairway is one of the biggest companies. I think we're the second largest purchase lender in the country. So we do have somebody from every state that's wonderful that can help you guys. So I just want everybody to rest assured that we can, meet the needs of anybody here. So, yeah, you probably hear in the background, I have two wild feral little girls, 3-year-old and 4-year-old. If you hear them, I apologize. We're trying to keep them busy, but they pop in every here and there. So let's start and let's try to make this as interactive as we can. So um, if everybody would go to the chat and let me know what's the biggest thing you want to learn today. People have already talked about credit scores, just kind of want to learn the process. What's your biggest pain point? What's the obstacle that has thus far prevented you from buying a house? I'll let you guys just type in there or unmute, whatever you guys want to do. Let's see what you got. Getting a good loan. Okay. What else we got? Pain point is down payment. Yeah. Okay, good. Well, being in Florida, especially in most states have different programs like this, but we'll definitely talk about down payment assistance and how that works, especially here in the good old state of Florida. What else we got? And you guys can also just throw it in there as we go. Credit score. Okay. Yeah, yeah. Yeah. Credit is now two people have now brought up credit score. So we're definitely going to talk about credit. Okay. All right, well, we'll keep going here. So, um, I know the process of buying a home can feel stressful, but I think having knowledge kind of takes that anxiety out of the process. So, what my goal is here again is to just make this as collaborative as possible, to let everybody ask all the questions that they have. I'll stay as long as you guys need to talk about something, or we can set up a time later to speak one-on-one if that's easier for anybody. So I think if you have the knowledge of kind of some of the loan products, a little bit how credit works, all that kind of stuff, I think that'll make you guys feel a little bit more at ease and ready to start into the process. So I'm going to give you kind of a little roadmap here. Let's go to the next slide. Okay. So basically, the first step, I know a lot of people, they may not know what a loan officer is. So that's what I am. I'm a mortgage loan officer. So I'm the person that sets up the financing for you to buy the house, that gets you the pre-qualification letter that you take to the seller of a home whenever you want to purchase. So um, let's go through the process. So step one is to come to me. We will have a kind of little sit down. We'll go over your goals. We'll go over your monthly payments. Also, this is a even without kids, we have a zoo running around this house as well. So this is my cat, Charlie. So first step is to talk with me. We'll go over, your preferences, your credit score, your income, and how that all works. And we do what's called a pre-qualification. So basically, you submit an application. It's totally free. Applications don't cost anything at all. And from there, what we do is we review it and it'll have everything from your income, your living situation currently, any funds or assets that you might use for closing costs, down payment, all that good stuff. Um, It'll go over kind of all the basics that we need to know to understand your general financial picture. And then what we do is we do a soft credit pull for most people. Unless you're actively going under contract, we can do a soft credit pull so it doesn't ding your credit. And that also gives us the ability to then do some credit repair, which we can talk about more. But if your big holdup is getting your credit score where you need, we can set you up on a plan. And if you do need some sort of longer term, more in-depth help, we work with a company called UQual that has really reasonable monthly plans to be able to kind of help you build if you need, a year or something in the making to get your score where you want it to be. So doing that whole kind of initial review of your finances is the pre-qualification. And when everything checks out, I basically hand you a pre-qualification letter that says, okay, you're pre-qualified for a home up to X amount of dollars. So let's say $300,000. And what you then go to is if you already have a real estate agent, you guys can do the fun part, which is going shopping. And they typically will not take you shopping for a home until you have that letter in hand. It's super important because obviously you want to be shopping in something that you can afford. If there's anything hiding in your credit report or anything like that that might prevent you from buying immediately, I'm a big advocate on, I don't say no, really. I just say maybe not right now if there's anything that's preventing us from moving forward at this instant. So, for example, let's say you've had a recent bankruptcy. That's something that is not a no, never. It's just a not right now. Typically, you have to be 2 years out of a bankruptcy to qualify for a mortgage. So, something like that we want to know, especially before you go shopping, because we don't want to waste your time. We don't want to waste your realtor's time. We want to make sure that everybody is moving forward in the right direction before we start actually getting into that process. So that's the pre-qualification part. So once we're there and once we verified everything and gotten you the numbers in place and everything like that, you go shopping with your realtor. And once you find a home that you really like and you're interested in making an offer, you and your realtor will work together to negotiate an offer to buy the home. Obviously, I'm still in the background here, running numbers for you on specific properties, so you do have a good idea of what your monthly payments are going to look like, what your closing costs are going to look like. And once you submit an offer, if the seller accepts, then you are officially under contract, which is the exciting part. And typically from there, it's something like a 30-day window is average. It can be less, it can be more, but 30 days is average once you're under contract. So if you went under contract today, I had somebody that went under contract today, they're closing September 3rd, just to give you an example. That's a typical time frame. So from there, this is the part where we start spending actual money. So up until this point, it's all been, no costs involved or anything like that. Once you go under contract, in the state of Florida, it varies from state to state, but in the state of Florida, you put something called an earnest money deposit down, which is just a fancy way of saying a deposit. Each state changes and is different. I know the state of North Carolina, for example, also has something called due diligence. You pay a deposit and due diligence. So that's going to vary state to state. We can talk about specifics if anybody has questions about that. But you do your earnest money deposit, and then from there, you're going to this inspection piece. And this is not technically required by a lender, but we highly recommend it because what this is your ability to bring a home inspector into the home and inspect the things that you can't see. What's hiding in the walls? What's the foundation look like? This is usually a few $100s, the inspection. It's not money that goes towards closing costs or anything like that. This is an out-of-pocket expense that you should expect during the home buying process. And again, it's not required. But what it does is multiple things. It lets you know if something is hiding in the walls or the foundation. I'll give you an example. Um, had a fellow coworker that put an offer on the house, and once she went under contract and did her inspection, she found major foundation issues, something like $15,000 to $20,000 worth of foundation issues. And at that point, she decided, nope, not my house. Backed out of that, which you are fully allowed to do, and any deposit that you've put down, typically you can get back. So that's a huge, huge win for her. She spent a couple $100 and saved 15,000. So we definitely recommend that. And what an inspection also does is gives your realtor the chance to negotiate with the seller of the home. Because oftentimes sellers will play ball, and if you say, I'm going to back out of this home if you don't fix XYZ thing, then they may come to the table and offer to fix that. And had you not had that inspection, you would have known it needed to be fixed, and then you're covering that cost on your own. Um, so inspection is a huge thing. Um, I definitely recommend it to everybody that is shopping for a home once you go under contract. After this part, you've already applied for the loan. I always feel like this piece is out of order. But next, we're going to loan estimate. So this is once you're under contract, this is when I first send you your official loan estimate. So this gives you, obviously, I'm going to give you numbers beforehand so that you can see what's going on. But this is your first official loan estimate. It has to be sent within 3 days of you going under contract, essentially. And signing a loan estimate or signing any documents in the process, just so you guys know, is not a promise to agree to those terms. It's a intent to proceed, they call it. We call it ITP. So that just says, yes, I've seen the numbers, you've disclosed them to me properly, and I want to move forward. You are not locked into anything. You are not locked into buying that house. You are not locked into whatever rate there is at the time until we actually do lock it. As the process goes, you're really not locked into anything until you're at a closing table physically signing paperwork. You could back out of a loan the morning that you plan to sign if you want to. Obviously, any money that you've spent on an appraisal or inspections is gone at that point, but you're not locked into that loan until you're there. So, once you've gotten that loan estimate, you go into the underwriting queue, and the underwriter is the gatekeep to the whole operation. Okay, they are the person that will review that file behind me or whatever loan officer you end up working with, and they will review that everything about your application meets the guidelines of the loan program that you're in. And once all of that is good, they usually come back and forth with, okay, send me bank statements, send me pay stubs, W-2s, taxes, all that stuff is common. Once they have everything in the file they need to fully meet guidelines, that's when you get final loan approval that we're looking at here. And that's the best words in our industry are clear to close. So whenever you get that, that means you have gone through all the rigors of the financial vetting process and you are officially ready to go to the closing table, wire your money to the title agency, the lawyer, and you're pretty much set to go at that point. So again, we send you another final closing disclosure with your final numbers. Um, Closing docs are sent to the title company or the lawyer, attorney, wherever you go to in your state. You will wire whatever money might be owed at closing to that title company. And then you physically go and you sign the paperwork. And when you sign the paperwork, that is when the deal is done. Okay. And then you're a homeowner. So let me check in with everybody and see have any questions popped up out of that kind of general walkthrough of what the process looks like. So pre-qualification, home shopping, negotiating, going under contract, going through underwriting, and then initially closing. Any questions? Did I move through that too fast? Just give you guys a minute or two here to type. I know, especially if you're on your phone, it might take a second. So feel free to unmute. Again, like I said, you are welcome to pop in and ask anything that you want. Okay. Seems like we don't have anything, but obviously I can see the chat, so keep asking if you do have anything. So this is a piece that everybody wants to know about during the home buying process. So what is the money out of pocket? We've talked about this a little bit. But again, earnest money deposit. An earnest money deposit does contribute to your total closing costs. So it's not a deposit that goes anywhere and does nothing. Your total closing costs are reduced by whatever deposit that you put down on the home, just so you know, it's not wasted money. Inspections, again, we talked about this, not required by us, but highly recommended. So that could be something like a home inspection, a pest inspection, and at least most insurance here in Florida requires a 4-point and wind mitigation to um, bind an insurance policy, which is going to be required. So those are important. And they're great too because if you do them, yes, they cost money, but they typically get you a much cheaper insurance policy. So we recommend them, especially in the state of Florida, where one of the things that is expensive here is our insurance. No way around it. Just is what it is. Oh, did it go backwards? Sorry, guys. Um, Insurance in Florida is kind of crazy. And then the appraisal. An appraisal is another thing that since we do require it is part of your closing costs. So if you pay for that during the process, your closing costs are reduced by the amount of the appraisal. Generally, an appraisal is $625, something like that. In Florida, that's common. So kind of just a little roadmap here again. So we're just talking about your application, your credit. We're going to talk about credit score. I'm going to talk about loan programs, down payments. I know probably a big one everybody wants to hear about is down payment assistance. We love it. We do a lot of it. And then just some general do's and don'ts of the loan process. So we shall keep moving. So obviously the benefits of homeownership. Um, Mortgage payments build equity in your home. So when you're renting right now, you're essentially paying somebody else's mortgage or just putting money in somebody else's pocket. Because for you, all of that money is flushed down the drain, right? You pay it, it's gone. There's no more of it. Mortgage payments, a piece of every mortgage payments does pay down the price of your home, the cost of your loan. So every time you submit a mortgage payment, you pay off a little bit more of your home loan, but that's your money. That's that's the equity in your home. So it's not flushed down the toilet the way it is when you rent something. So it's the beautiful part of that. And we've seen the way home prices have risen in the last few years, especially during COVID. So a lot of times the equity in your home does grow without you doing anything, especially if you bought in 2020, which I know is not anybody in the ballpark here because we're talking about first time home buying. But if something like that were to happen again, you're sitting in your home and the value of your home goes up. It's just like your net worth just grows by just being a homeowner, um, which is an amazing piece of it. And you qualify for federal tax deductions. And every time you do an upgrade to your house, typically that increases the home's value. So you're pouring money into your house, making your house look better, making it more of what you want it to be, but also increasing the value of your home. So all great things. Okay, I got a question here. If I do an inspection and discover a red flag, do I get my owner? Yes, yes, you do. Especially in Florida, there's a inspection period where the owner of the home has to allow your inspection people into the home to do whatever inspections you needed. So if you were to discover, like I said, my friend did, her foundation of the home being cracked or whatever the case would be, yes, if you had already submitted an earnest money, you would get that back because that is held by the title company or the lawyer that you're using. It's not held by the seller. So it's in a disinterested third party that will give you that money back should you decide to back out of the contract. So yes, absolutely, Perry. That's a good question. Okay, let's keep going. Here we go. And this just gives you a little, national homeowner equity. So just by being a homeowner, you often have a good chunk of equity already saved in the home. Okay, let's keep going here. Okay, so these are questions that a lot of people ask. How much home can I afford? So when we do that pre-qualification, we can go about it multiple ways. If you tell me I don't want my monthly payment to be any more than $2,000, then I will stop you where $2,000 is a month. If you want to know what's the max I can qualify for, even if you would never go that high, I can tell you what the max you would qualify for. And in that as well, we'll tell you what your closing costs will be and how much money you will need to how much money you will need to put down on the home depending on the loan program that we're in. So that's going to vary program to program because there are multiple things that make up what you owe at closing. It's your down payment plus closing costs, which are things like our fees as the lender, which our fees are 1585, $1,585. Things like your escrows for your taxes and insurance, things like the money that a lawyer charges, the title company. A conservative number here in Florida is anywhere between 3 and 4% is pretty standard that you're going to pay in closing cost fees, plus whatever down payment you're going to pay. So let's see here. Let's keep going. Okay, credit score. I know everybody will ask about credit score. So Um, do we see the same credit score you do? What we do tend to see a different credit score than you see on something like Credit Karma. Because we're doing a mortgage credit pool, it's a little bit more strict than your typical car credit pool or just your, applying for a credit card, something like that. It is a little different. Um, and we will see, but whatever your Credit Karma is usually in the ballpark. If you have a 650 on Credit Karma, I wouldn't be surprised if it was like a 630, 640 by the time you get to me. Um, so these are the kind of things that make up your credit history or your credit score. So um, amount owed, your payment history, your max credit mix and all that good stuff, your length of history, and any new credit that you've pulled recently. So for us, if we pull your score and we see that your score is not high enough to qualify, we can put you on a credit plan. There's no cost to do that. If we just do it with us, I can send you exactly what it would be. Sometimes it's a matter of paying off cards or paying down cards. Sometimes it's a matter of if you don't have much credit, opening up a secured credit card. That's often something that really boosts it quickly. It might be doing something called pay for deletes if you have collections or things like that. Um, Typically charge-offs, if you guys have charge-offs on your credit report, those have already done the damage that they're going to do. And typically that doesn't help you to get rid of those. So just a word to the wise, if you're thinking about what you would do, I would definitely let us do a soft pull and pull a credit plan because it's not always it doesn't always work the way that you think it will. Sometimes you think, okay, if I pay this card all the way off, it'll help my credit score, and sometimes it does, and sometimes it doesn't, unfortunately. Credit is difficult. So don't go at it blindly. It would be in your best interest to do a soft pull because that does not ding your credit and let us put together a plan for you so that you're not going about it blindly and that you're not paying money towards a card that is not going to help you. So just keep that in mind moving forward. So yeah, pre-qualification is the first part. I think we already talked about this, but it helps you determine how much you can afford. And I know that people sometimes just want to go shopping, but when you're ready to put in an offer, especially if you're in an area that's super competitive, if you don't already have your pre-qualification letter on hand, you can often miss out on homes. So you want to have that ready to go before you start shopping, because you want to shop in the range of home that you are actually comfortable paying for, that you actually can afford, that we can approve you for is obviously very important. And it just shows a seller that you've got skin in the game and that you're taking this seriously. So when you go to submit an offer, typically no seller is going to accept an offer for somebody that's not pre-qualified already, unless it's full cash, which obviously you don't need me if that's the case. But you have to have the seller know that you've come to the table and um, that you've actively gone ahead and gotten yourself pre-qualified. How long does it take to be pre-qualified? Um, Not long at all, especially if you have a standard, W-2 type job, standard salary or something like that. If you were to apply tonight, for example, probably um, within 1 to 2 business days, we will be able to get you pre-qualified. You'll do a credit pull. Self-employed. Yeah, self-employed does take a little bit longer. Most self-employed jobs, we need to see 2 years on the job. So if you are somebody that's self-employed and you're new to that, we're probably going to have to get you in that job for at least 1 year, more than likely two. And with self-employed people, we typically need to see your taxes. So your taxes will, and it's kind of a double-edged sword, right? So when you go and submit your taxes, we all try to show the least income possible because we don't want to be taxed on it. But unfortunately, when you do that, then you submit that to me, I don't see very much income that I can use to qualify you. So If you are self-employed, Zach, and you're thinking about buying soon, it's I would be speaking to your accountant or whoever prepares your taxes for you and maybe prepare in the next year or two to write off less stuff than maybe you have normally. Obviously speak to them. This is a whole process to go through, but self-employed probably give me an extra day. So I would say typically that's more like 2 to 3 days, but it's not a long process to do so. Will you get some of the materials at the end? Yeah, absolutely. I can send you the whole PowerPoint if you want. I could have emailed that to you guys. I didn't think to do that so that you guys could print it and write on it. But yes, Gigi, oh, and hi, Gigi. I will get that to you at the end here so that you guys can look back over this when we're done. Or like I said, reach out to me via email. I'll have my email at the very end. And you guys may already have it, but you can always send me an email, shoot me a text message, whatever, and we can set up a time to talk individually for anybody that wants to. Okay, let's keep going here. Okay, so we have four major loan types. So we have a conventional loan, an FHA, a VA, and a USDA. So let's talk a little bit about kind of the difference between them. So a conventional, I kind of think of as like the Gold Star loan, if we can get into it. It's not always the best option, but it typically, especially with people above say a 700 or so credit score has the best interest rates outside of VA. VA, obviously, we give our military really great rates too. But conventional, um, the big selling point of conventional is that there's a piece called mortgage insurance that a couple of these loan options has. And conventional, that piece will fall off your monthly payment after you have 20% of the home paid for. So we love that for that. FHA is also a great option, but and it gives a lot more flexibility. So if you have a little bit lower credit score, if we need, it gives you a little bit more room for your debt to income ratio, which we can talk about that as well. Um, this one just has a lot more flexibility, allows a lot more leeway in terms of faulty credit or anything like that. And honestly, the FHA rates, especially below 700, are better than conventional. So I think it's a great option for you, especially if we need to work on credit. Would you, what would you prefer for first-time home buyers with low credit or low credit history? Yeah, so that I would say let's get a soft credit pull in and let's build a credit plan for you. Um, Not enough credit history is a lot easier to fix than negative credit history. I'll say that. So if you are just somebody that just has not used that much credit in your life, it's really easy to get yourself a secured credit card, and put like $10 a month. Here's a general credit tip for you. Credit cards typically like to see a low um, balance on a card as opposed to a zero balance on a card. So instead of paying a card all the way off, if you have $25 on it or something, that's typically going to help your score more than just paying it all the way off. And that's an example of, that feels kind of counterintuitive. But it tends to be that way. So, okay, we talked about conventional FHA. VA is specifically for military. So somebody on loan has to be an active or former military. It does have a lot of perks to being a VA loan. So if you are somebody in the military or you're married to somebody in the military, it's a really great loan option. The last one is a USDA loan. So USDA loan is a really good loan. It's just for specific purposes. So a USDA loan is meant for moderate to lower income and it's in non-urban areas. So a lot of the country is USDA eligible, but the property itself has to be eligible. So you would have to look that up, and I can share the link with you guys to do that, to look up what property is eligible. Basically, anywhere in a city is probably not going to be USDA eligible, but once you get out into the suburbs and beyond, most of the time, that's when you find USDA eligible loans. And they're a really good option. They're just a specific, you have to, your debt to income ratio on that one is particularly low. So we don't have as much flexibility with your income there, but it requires no down payment. And that's what we're going to talk about next is our down payments. So does anybody have any quick questions about the kind of loan types here? Oh, somebody from Tallahassee. Hey, Laurel. Love that. I'll just give you guys a second to type in. Okay, I'll wait to see that come. We'll talk about down payments next. So, ah, oh my goodness. Oh, my cat's on it. Sorry, guys. That is you gotta love that. Let's go back through this. You see how I had like 19 slides before and now I have 113? That is does the VA need to be active? No, retired counts. Yeah, retired counts. Hold on. Did you see my cat just go bananas on that? Yeah, so especially if you are former military retired and you get like disability pay or anything like that, military retirement, I love those borrowers because those are just they're easy to calculate. So parent is difficult. So if you're not married to the person on the loan, then let me just go backwards here. I'm sorry, guys. My cat literally laid on the button. Okay, here we are. Let's start. Here we go. I'm correct side. There we go. Sorry, guys. If you try to be on a VA loan with a parent, or if you're the parent and your child is because I'm working with somebody like that right now, and the child is the veteran, you can do things like this. The issue is the beauty of a VA loan is that it's one of these zero down payment loans. And if you do that as not husband and wife, your down payment requirement is much higher. So you won't get to do the zero down. It usually ends up to be like something like 12 to 13% down on a VA loan, which takes away the beauty of a VA loan, unfortunately, because you love that no down payment option. But yeah, so you can do a VA loan with somebody that's not a spouse, but it's maybe not as attractive as another loan type at that point. So, as first-time home buyers, a conventional loan is a minimum of 3% down. FHA is a 3.5% down. And that's all the time, whether you're a first-time home buyer or not. And then VA and USDA are both zero down loans. Now, on both of those, if you do want to put money down, you absolutely can. But it's just not required on either of those. So, there is a difference between down payment and closing costs. I know I touched on this a second ago, but let's go into that a little bit more. So your closing costs encapsulates everything. So your closing cost is your down payment. It is our lender fees, like I said, which are $1,585. It's your appraisal if you need a survey. It's all of the title work and all the taxes involved from purchasing a property. It's something called escrows, which might be a new term to you guys, but an escrow account is basically a holding account for your taxes and insurance. That way, when you go to pay your mortgage payment, and when I quote you a monthly payment, your payment not only includes the principal and interest of the actual loan amount, but it also does include your taxes. It does include your insurance. It does include if you were to be right on the water, if you had to have flood insurance, something like that. That's not common. But if you did buy a house that's right on the water, you might be required to have flood insurance. And the only other thing that it does not include is your homeowners association dues, because typically they have to be paid separately. But yes, so difference between down payment and closing costs is that down payment is part of your closing cost, but keep in mind when I say that you have 3% for a conventional loan, you have that 3% plus those other costs as well. Okay. Hope that makes sense. Let's keep going here. Any questions about down payments? I'll let you guys just ask away. Okay, minimum credit scores. So, on a conventional loan, it's typically a 620 minimum credit score. Honestly, if you're at a 620, I'm probably not putting you in a conventional loan just because um, the interest rate's going to be better on an FHA at that price, at that credit score. VA is also 580 and USDA is a 620. Now, FHA, it does say 580, but we can actually get you down to, I know we have 500 credit score options on FHA. If you were to have somewhere between a 500 and a 580, we do have options. Typically, that's going to require a little bit larger down payment or other compensating factors, but we do have options down to 500, just so you guys know. Okay, this is probably one of the things that everybody wants to know about. So, first-time home buyer programs, down payment assistance is a huge one. So, here in Florida, and like I said, every state has their own thing. So, I'm pretty sure they exist in Texas, they exist in Georgia, Virginia, North Carolina, all these things. Um, Down payment assistance is typically reserved for first-time homebuyers, which is everybody here more than likely. And also, you can re-qualify as a first-time homebuyer if, say, you owned a home a while ago. If it's been more than 3 years since you had ownership in a home, then you typically qualify again as a first-time homebuyer. So that could also mean, like, let's say you're on your parents' home for whatever reason, if you have ownership interest in a home, even if you don't live in it, it would disqualify you. So that's something to keep in mind. Now, here in Florida, we just are getting the Hometown Heroes program back. It does provide 5% of the purchase price and down payment assistance. So, for example, if you are buying a $300,000 home, that's $15,000. So, and then if you've got something like the Florida Assist program, which does not go away, the Hometown Heroes, unfortunately, is super popular here in Florida. So once all the funds from the program are used, we don't get it again until next summer because it typically starts in July. The Florida Assist program, though, however, does not go away and it exists year round. And that one will give you $10,000 to help with your down payment and closing costs. So even though it's called down payment assistance, it gives you $10,000 towards everything. So if your down payment is less than $10,000, then the remainder of that will go towards the rest of your closing costs, which again includes our fees, your appraisal, title costs, all that good stuff. The Hometown Heroes program this year too will have job specific requirements. So for example, you would have to be, it's a whole list of stuff, but it's medical professionals, anybody who was deemed essential during COVID, it's kind of that type of person. So teachers qualify, obviously military qualifies. If you're in any sort of daycare workers, I believe qualify, childcare of any sort. Um, what else qualifies? Nurses, things like that. Firefighters, police officers, all that kind of stuff qualifies for it. It's a really good program. It just is so popular that it runs out of financing quick. But all these other ones exist. So, and I'll give you a caveat as well too. So you have to be a first-time homebuyer. With all of these programs, you'll have to have a minimum of a 640 credit score and they have income requirements too. So, for example, here in Duval County, for 1 to 2 people in a home, the income requirement is somewhere right around $100,000. So, you guys would have to be under that income limit in order to qualify. Now, if you are in the low hundreds, we do have other options, but the Florida Assist is the best option, honestly, because the rates are always the lowest on that. So, if we can qualify for that, we do. Now, with all of these programs, I think it's important to know that none of these are grants or free money. It's important to remember that these will be second liens, right? So it's just a second mortgage on the home, but there's no payment on it, nothing like that. You really don't have to think about the loan from now into the future until you sell the home or you refinance the home or you pay off the mortgage or you turn it into something like an Airbnb if you decided to turn it into an investment property. All of those things would cause whatever money you had in that down payment assistance, whether it's the $10,000 or the 5%, would cause that money to come due. So more than likely, you would probably be in a selling situation. So if you stood to receive $100,000 off the sale of your home, now it's going to be $100,000 minus whatever you had in down payment assistance. So I kind of think of it as like a pay it forward type of thing. It'll help you get into the home. It will not require you to exhaust the funds that you may have in the process. But once you're in the home and you've moved to your next home, now that money kind of goes back into the bank for people in the future to be able to use it. So I hope that makes sense. Do you guys have any questions on down payment assistance? Hometown Heroes will be back on the 18th. That's when that one is back in the game. Would you prefer us to work on credit then apply for that program? So you don't have to apply for the program. I do all of that work in the background. So once we get your credit to the place that we need it to be, once you're at that 640, then I pre-qualify you based on that information and knowing that you qualify for the program. So you don't have to go and do some sort of separate work on the outside. We just have to get you to that credit score if that's something that we need to work on. Hope that makes sense. It's a good question. Your credit building, it depends on what we need to do, right? So if you're 10 points away from a 640, say you're at a 630, that might not take that long. That might be a matter of paying down one card. That might be a matter of getting one collection deleted from your report or something like that. It's all going to depend on how much credit repair we need to do, and then obviously the cost of it. Because if it is something like, you need to spend a good bit of money to repair your credit, it might take time not only to just do the work, but to physically have the money to do so. So that's just going to kind of depend on each person and what needs to happen. But obviously, we can we take that all into account when we create the credit plan. So, we'll look into that for you and see what that requires. Do you guys have any questions on, I didn't put a slide in for this, but I think a lot of people always want to know how we determine what you qualify for. What's a good time to buy a house? A good time to buy a house is when you're ready. I know that people feel very on the fence right now. And I know that people want kind of a market crash or are waiting for a market crash. Um, we don't have any indication that's coming. In the last market crash back in 2008, 2009, um, what happened was people were giving away loans without checking your income, without checking how much money you had, doing all of these adjustable rate loans. You really should not be an adjustable rate loan unless there's a very specific reason why you're doing it, because it's risky and it's not good for most people. Um, we have corrected how the whole financing process works since 2008, 2009. So the likelihood of having another crash like that is unlikely. Um, and the longer that you sit on the sidelines, the more you pay somebody else's mortgage, and the longer you don't pay yours. And homes don't tend to go down in value, they only tend to go up. So you wait 5 years from now, the home that you would have bought now is likely going to be 10% or more than what it was now. And we use this phrase, which some people hate, but it's called marry the house, date the rate, because you can get into a home and even if it's at a credit or an interest rate that you're not currently happy with, you can refinance the home. And when rates come down, you can do that. But if the prices of home go up, they go up. And they're more than likely, without some large event, are not coming down. So I would say whenever you are comfortable moving forward, I wouldn't wait. When interest rates do come down, whenever that happens, they've been promising it for a long time and it hasn't happened for a good 3 years now. Whenever they do come down, be warned that a lot of people have sat on the sidelines for a long time. And if we get a substantial drop quickly, a lot of people are going to flood the market at the same time. And that's going to do the same thing that it did back in 2021-ish. Multiple offer situations having to go above the list price to win a home, all that kind of stuff. So you kind of negate whatever gains you made in lower interest rates. Um, I think enjoying you speaking out. What if we fix the house up? Will that increase? Yeah, absolutely, definitely. And we do have renovation loans as well. So let's say you find a house that you love, but maybe you know that it needs new windows, or it has carpet and you just can't stand the thought of carpet. Um, you can factor the cost of renovation into the total loan amount if that's something that you're interested in doing. Um, so yeah, and what will that increase value? It depends. So, like, if we do a renovation loan, you have to have bid from a contractor, and the appraisal of the home is based on what the home will be worth once all of that is done. So in the process of buying a home, we do an appraisal on a home because obviously a mortgage lender is not going to give you a loan for a home where the loan is higher than the worth of the home. So we always do an appraisal to ensure that you're in a good loan, you're not underwater immediately on a loan. Um, yeah, and so if you do a renovation loan, if you buy a house for $100,000 and you put $100,000 in it, you're going to have a $200,000 loan plus some a little bit for contingency. And obviously, the higher the purchase price, the higher your monthly payments. How long does it take roughly from pre-approval to closing? Um, the pre-approval only takes a couple days, like I was saying. Once you go under contract to closing, so once you actually found the home and got an accepted offer on it, that's usually about 30 days. We can do as little as 2 weeks if there was something pressing and we could rush all of the pieces to the puzzle. But an average is 30 days or so. Can the loan company retract the pre-approval? Would you tell us if it's worth it or not? Like do you mean if the home is a good investment? That would probably be a better so I do all of the financing pieces of it. Usually you don't see me in person until closing. Which is sad. I don't like that part of it, but usually you don't see me in person until closing. Obviously, Gigi, you're a different situation. But uh during the process, your realtor is the one that's going with you to houses. They have a better grasp on, looking at a house and saying, like, yeah, I don't know about this. This home doesn't really look like it's well made or things like that. That would probably be a better question for a realtor because they'll be able to they just have more experiences being in a ton of homes, seeing what a home actually looks like that people are putting offers from. I love to look at the houses that you're going under contract for. I love to look at them online. I love to see all the cute pictures and all that kind of stuff, but I'm usually physically never at that house. So that's usually a question for your realtor. And if you don't have a realtor, especially if you're in one of the 4 states that I'm in, I work with so many good people that I can point you in the direction of a good one. Can the loan company retract the pre-approval? If circumstances change, I guess that's possible. It doesn't really happen too much. It would only happen if, say, you quit your job. And I'm about to go through the do's and don'ts of mortgages, so I'm going to share that to you too. But it typically doesn't happen unless rates go up so much that now you don't qualify for what you qualified before, or if you were to quit your job, or if you had a certain chunk of money saved that is now no longer available. Things like that could cause issues, but that's pretty much it. Typically, when I give you a pre-approval, it's good for 60 days. And then even if you don't find a home in that 60 days, that's totally normal. Some people look for years. Um, all we have to do to refresh that pre-approval, we may end up having to do a new credit pull, and we probably just need to update your pay stubs and stuff like that so they can see that your income hasn't changed. What if we find a home that costs more than we are approved for? Could we go back for more? Yeah, so it would depend. It would depend. Like if I tell you that your max loan amount is 200 and you're looking at a $300,000 home, no, probably not. If I tell you that you're qualified for a $200,000 home when you see a $205,000 home, you may still qualify for that. I hate even giving a number sometimes because what you're qualified for depends on a lot of factors. And if it's a newer home, maybe your insurance policy is going to be cheaper, we foresee, and you could qualify for a little more than 200. If it's a really old home and we see that, your taxes are going to be high on that home, or you're going to have a beefed up insurance policy to make it work, maybe you qualify for a little less. But yeah, and it's always everything in the process is negotiable. So, if you get into the process by yourself, you weren't planning on adding a spouse or a girlfriend or a family member, we can always add them in, or vice versa. If you come into the process with your spouse, but let's say your spouse doesn't have a good credit score, or maybe they're like a stay-at-home parent and they don't have a good credit score and they really don't help your loan, they only kind of hurt it, we can remove them. People can always be put on title to the home so that they still have ownership interest in the home without actually being on the loan. So those are two separate things. You could not be on the loan. I could never see any of your financials. But if we are putting you on title to the home, then you still have ownership interest and you still partly own the home with the other person on the loan. Does that make sense, guys? And I figured one thing, I wanted to mention DTI really quick. So that's a big thing in what tells us what you can and can't qualify for. And how do we calculate that? So it's basically your debts divided by your income. That's why it's called debt to income. So we take everything that comes in from your credits report. So that's not all your bills, right? That is car payments, student loan payments, credit card payments. Um, if you had a tax lien or something that was on there, that's unusual, but it happens. Anything like that that comes in from your credit report. So that what that doesn't include is things like car insurance, home or your phone bill, your light bill, you know, your health insurance. None of that will come into play from your credit report. So take all of that stuff from your credit report, add whatever your proposed mortgage payment is. So let's say that's $2,000. And then we divide it by your total income, right? So that means, let's say you make $50,000 a year. We get to use $50,000 a year. We don't have to use whatever hits your bank account, if that makes sense. So we get to use your gross income before your taxes are taken out, or your health insurance and your dental insurance, all that stuff is taken out. We get to use that full amount. There are caveats to that. But so let's say you've only been in a job 1 year. Typically at that point, we can't use anything outside of your base pay. So if you're getting overtime, if you get a bonus randomly or commission, um, all of that stuff may or may not count into your total income. Is DTI your monthly payments for is DTI your monthly payments for debts divided by gross income or total debts divided by yearly? So we do everything on a monthly basis. So everything that comes in from your credit report will say, like, if you have a credit card, for example, and it's $50 a month, so that's $50 a month, and then we're taking if you made $50,000 a year, um, we'll divide that by 12 essentially. So it would be your debts per month divided by your monthly income. Does that make sense? What if we get paid travel time and expenses as well and they are not taxed? Yeah, so it depends on, like I said, typically you're gonna have to be in that job for 1 to 2 years. If you're in the job for 2 years, pretty much automatically, yes. If you get bonus, if you get overtime, if you get travel time, all that stuff paid. If you've been in the job for 2 years, then typically we can use that additional income because what the issue is that some of that income fluctuates. So maybe you get a lot of overtime 1 month, but you don't another. Maybe you get an annual bonus around Christmas, but that's the only time you get a bonus a year. They want to average that since it does fluctuate so that they have a stable idea of what it is. And you can't have a stable idea of what it is if you've only been in the job a few months. That's why they typically want that for 2 years. So yeah, it's still, and we'll ask for pay stubs and we'll ask for year-end pay stubs because that'll show us the total amount that you've earned at the end of the year. So we can see, okay, for the past 2 years, she got overtime. Okay, for the past 2 years, he got a bonus. And we can usually average that over 12 to 24 months. Can we start our credit building while we want to build longevity at our job? Yeah, I mean, I don't see any reason why you wouldn't start the credit immediately, especially if you feel like you have a longer term credit issue that we need to work on. Um, you know, anything that you do to start building that will help you. Even if you're not where you want to be in 6 months to a year, if you go from a 500 to a 600, that's huge. Even if your goal is to get to a 700 or something, I wouldn't wait. I would say start that process, but obviously, it'll be a case-to-case basis. Okay, I'll keep going here. So things that we look for, and we have seen everything in this job, but things that you should know going into the process. So if you are somebody that has physical cash that is not in a bank, We typically want you to go ahead and get that into a bank, probably wait a month and then come to me. The issue is if we can't source where that money came from, we can't use it. And why is that? It sucks, but basically 99% of the population is punished for what 1% does. So if you are somebody that if somebody is getting money illicitly and they can't show us where it came from, that's the reason why we can't use it. So if it's already in a bank account and we don't see it entering the bank account, if it's just there, we can't ask any questions. But if we see a $20,000 deposit on your bank statement that you're using to show us the money that you're going to use for closing, then we're going to say, where did that came from? If you're like, oh, it's just cash I had, it's not going to be usable. So um, if you have that sort of situation where you have cash set aside that's not in a bank, I would go ahead and urge you to get that in a bank, wait for a month of what we call seasoning on that, and then after that, your next bank statements are going to show that money already there and we won't ask questions. Um, okay, same thing with accept money from a family member. Obviously, in the process, don't quit your job. I think a lot of people think that we check your income when you first get there and then that's it. But we don't do that. We get something called a verification of employment from your employer. We check that before you close, and every now and then a person will have quit their job. And an underwriter will say, well, why in the world am I going to approve you for a mortgage if you no longer have this income? So don't quit your job. Um, Changing your job is a little bit different. It depends. If you have the intention of changing your job while we're in the process, just talk to me about it. Sometimes that's totally fine. Sometimes it's going to cause issues. For example, that could cause issues if you're 100% commission. Like let's say you're in car sales or something like that, and your job is fully commission. If you switch jobs, we no longer have whatever time that you had on the job to be able to average that income. That goes away. If you're just going from one W-2 type of job to another W-2 type of job, usually that's fine. Don't make any purchases. So some people will feel like, again, I've gone through the pre-approval process, I'm under contract on the house, I've already been approved. Now I'm going to go ahead and buy all my furniture. But you would want to, I would urge you to wait until you're totally done and signed and closed before you do anything like that. Because again, a purchase like that is going to show up on your credit report, and that could be something that counts against you in terms of your debt to income. So that would go in that top piece where it's the stuff that comes in from your credit report divided by your income. That could cause a big issue, and especially if your numbers are tight, um, adding a large furniture payment or something like that could be something that gets you denied. Um, so again, not some all of this comes with caveats. If you are well below your DTI or something like that, and you are taking out a small loan, we might be able to absorb it. So all of this is just worth a chat, okay? If our spouse has longevity 2 years, but we don't, does that affect? That just may mean that their income is usable and potentially yours is not. Um, so anybody that has longevity is a good thing. And like I said, if it's a sort of thing where maybe your spouse ends up being the only person on the loan, if they have decent credit, if they have longevity in their job, maybe what we do is we just put you on title and you're not on the actual loan. And all that is different when we pull credit. It would show up on your spouse's credit report. It wouldn't show up on yours. You would still have ownership interest in the home. Okay, so that's the don't. So this last one here is the do's. So be ready to have your credit pulled. Like I said, we can do a soft pull. If you are actively going under contract, I wouldn't recommend a soft pull. You have to have a hard pull to go through to underwriting. So that's going to be a non-negotiable. You're going to feel sort of your soul bared in this process. Because we do ask for a lot. I'm not gonna lie. We ask for pay stubs, bank statements, W-2s, tax returns, all this kind of stuff. When we're asking for these things, we're not looking at where and how you spend your money. It's more just that you don't have large deposits, that the money that you have is usable, all that kind of stuff. Um, we've talked about down payment assistance in terms of a way to have money for closing, but you also can have a gift from a family member. If somebody in your family is willing to gift, like maybe a grandparent or a parent is willing to chip in money at closing, that's usually perfectly fine. We'll just document it. They sign a letter that says we give this as a gift and we don't expect it to be repaid. Whatever you do with that after closing, we have no control over. But yeah, you can use that for as well. So if you have a family member that that would be willing to give you a little bit, even if it's $1,000, something like that. Basically, in that process, they again will give us that letter that says they're gifting this money. They don't expect it to be repaid. And then they just send a wire to the title company. It used to be that they would have to provide a bank statement, which is kind of icky. But now with conventional and FHA loans, they can just wire it directly to closing, and we don't need anything else from them other than that. Yeah, make all your monthly payments on time. Negative things on your credit report can disqualify you because they drop your credit score a lot. And if we do end up having to re-pull and your credit score goes down a lot, it could cause you to not qualify. It could cause you to qualify for less. And the last one, which you would think would be kind of a duh moment, but make sure everything's spelled correctly because that does cause issues in pulling your credit if the name that we're submitting to them doesn't match what's on, your driver's license or all this other stuff. It matters. Um, so yeah, I feel like I've talked a lot. I apologize. What other questions do you guys have? Okay, well, I'm going to stay on for a few minutes and just allow more questions to come in, but I want to leave this information here for you. Um, this is my personal cell phone number. So you guys are more than welcome to text this number. If you call during the later hours, obviously I might not get your phone call back until the next day, but you're always welcome to text this number. If you have any questions, if you want to set up a phone call, um, yeah, okay, good. We can definitely start doing credit repair. Um, Feel free to call or text this number. Feel free to email me if you want to explain a situation and kind of what you're going through. My website as well has a lot of resources on it. If I can maybe show you my website really quick. It'll be the last thing that I do here for you so that you can see. Let me share that with you. Here. Um, so if you go to my website, you can just go to carlie.mcleod.com. I'll put that back up for you in a second. But if you scroll down, can you guys all see the website? I hope so. Can somebody shoot just a quick text in there? Can't see the website. Okay, hold on. Here, did this do it? We're gonna check. Oh, I can't see everybody now. Can't see these. Now it's on. Okay, perfect. Um, just go to this carlie.mcleod.com. Let me go back if I lost it here. Sorry. I'll put it back up here. But if you go to did I lose? Hold on. Shoot. Can you see the website still? Because I can't. Yes. Okay. If you just scroll down to the bottom, hold on. I can't see my own website. Let me just go back here. If you scroll down to the bottom here, I'm going to show you a couple different things really quickly. So here you go. Mortgage calculator. So if you want to play with the payment and stuff like that, if you were to do a $300,000 home with whatever down payment I mentioned, 30-year loan, you can put in an interest rate here. The assumptions that it makes are, insurance, taxes, all that kind of stuff. You can play with that. If you want to know how much you can afford, yeah, you can absolutely have the recording. Yeah, no problem. Samantha, okay, I'll try to remember to send that to you, Samantha. You can click on the how much can I afford. So this is something that basically that calculates that debt to income for you. And if you go on my TikTok as well, I have a video about that goes into this a little bit more. So you can put your annual income between you and your spouse. How much are you planning to put down, for example, the monthly debts that come in from your credit report, and it kind of tells you about how much you would be able to afford with this. Yeah, how about I'll BCC everybody and I will send a link to this. I'll send my website link. I'll send the slideshow to so you can see all the slides that I did. I'll have to delete the ones that my cat added. And what else would you need? I'll send you a link for my TikTok as well, because it does have some of these tips on there that you can go into. Um, yeah, and the recording, of course. So, yeah, I think that's just about everything. Is there any other questions? Let me put my, oh, do you hear that's my little one? Oh my God, we must have hit time. Um, hold on, I'm gonna let her in here just a second. Let me put this back up so you guys can see that again if you need my contact info. And yeah, I hope that was helpful. Um, good, I've got everything from everybody, so I'll just let you guys go as you need. Reach out if I can help you with anything, and thanks so much. Would, yeah, you can text me. Yep, perfect. Okay, guys. Well, feel free to email me with any feedback if you have any questions. We want to talk, whatever we need, okay? I heard her. Thanks, Gigi. Thank you all for coming.